How is a real estate portfolio divided in an Illinois divorce? Dividing a real estate portfolio in an Illinois divorce is more complicated than splitting one home. In Illinois, courts use equitable distribution, which means marital property is divided fairly rather than automatically equally. The answer is that a real estate portfolio is divided only after each property is classified, valued, and allocated based on the facts of the marriage. Under 750 ILCS 5/500 property must first be identified as marital or non-marital before the court can divide it. Property acquired during the marriage is generally presumed to be marital, even if only one spouse's name appears on the deed. Property owned before the marriage, received by gift, or inherited may be non-marital, but commingling can change that result. If non-marital and marital funds are mixed so thoroughly that the original contribution cannot be traced, the property may be treated as marital. That issue often arises when a spouse sells premarital property and uses the proceeds, along with marital funds, to acquire or improve another property. A real estate portfolio is harder to divide because each property may have its own title history, mortgage balance, equity position, tax consequences, and income stream. A court cannot simply total every property and split the number in half. Instead, each asset must be reviewed on a property-by-property basis. That review becomes more complex when real estate is held through an LLC, land trust, or partnership because the court must determine each spouse's true beneficial interest. Illinois courts generally value real estate at fair market value as of the trial date unless the parties agree otherwise or the court orders a different valuation date. A home may be appraised using comparable recent sales, while rental and commercial properties may require an income capitalization approach. That means the appraiser may look at lease agreements, vacancy rates, operating expenses, property taxes, and building condition to determine value. In larger cases, an attorney may work with appraisers, forensic accountants, or other financial professionals to support a reliable valuation. After classification and valuation, the court considers the statutory factors in 750 ILCS 5/500 d to reach a fair distribution. Those factors include each spouse's contribution to acquiring or preserving the properties, the duration of the marriage, each spouse's financial circumstances, and the tax consequences of the division. A spouse who managed renovations, handled tenants, or identified investment opportunities may receive credit for those efforts. Rental income generated from marital property is generally treated as marital income during the divorce. That income may also affect child support and spousal maintenance calculations after allowable expenses are considered. Courts may divide a portfolio by awarding different properties to each spouse, ordering the sale of certain assets and splitting the proceeds, or allowing continued co-ownership in limited situations. Each option has different financial and tax consequences, including capital gains exposure and depreciation recapture on investment property. Transfers between spouses as part of a divorce are generally not immediately taxable under Section 1041 of the Internal Revenue Code, but the receiving spouse usually takes the original cost basis. To protect these interests, a lawyer should gather deeds, mortgage statements, tax bills, lease agreements, insurance records, and documents showing the history of ownership and improvements. A divorce lawyer and a property division attorney can also help review entity documents, trace commingled funds, and document rental income and expenses. For guidance on dividing investment property in an Illinois divorce, contact Caesar & Bender, LLP, a law firm and attorney team that serves clients from 150 North Michigan Avenue No. 2130, Chicago, Illinois, 60601, United States, and can be reached at 312-236-1500.